Hi, everybody, and welcome to today's webinar. I'm Leslie with the New Mexico Small Business Development Center, and I'm here with Peggy McDonough, who is a certified SCORE mentor. And she's going to be giving us valuable information on Are You Tax Ready? PPP, EIDL, and Employee Retention Tax Credit Implications. I want to remind everyone to go ahead and type any questions that you may have into the Q&A, because we will pick those up. If a lot come in, we'll pick them up at the end, but Peggy is great at making sure that all the questions are addressed. New Mexico Small Business Development Center also wants to remind all New Mexico small businesses about the risk to their cybersecurity. We have a whole list of pre-recorded on-demand webinars on the subject available on our YouTube channel. And throughout this presentation, I will send over the link so you can watch it at your leisure. All right, Peggy, turning over to you.
Thank you, Leslie. Well, first of all, I do want to thank everyone for attending today. Hopefully, you'll be able to bring back some good information that will help you in your journey as a small business person. This particular seminar is really a collaboration between SCORE and New Mexico Small Business Development Center to provide professional training and support. So again, like I said, in today's webinar, this is an example of that collaboration, and we hope you'll find your time today is productively spent and useful for your business as you move into the future. As Leslie said, please do not use the chat function during the webinar. We'll be using the Q&A instead because we're not monitoring the chat function. So be sure you write your questions in the Q&A and the slide number if possible. That helps me find it if we have a specific question. And again, as Leslie said, we will address all your questions at the conclusion of this presentation. I also want to make it very clear at this point that the SBDC we're prohibited from giving tax or legal advice. So any tax related questions, accounting questions, and specific questions about your individual company situation can only be answered with credible authority by your accountant or attorney. So please keep in mind the information that we're covering today is changing rapidly. In fact, I have a couple of updates that just happened this week, and it's based on the current understanding of the programs. It can and likely will change. And although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this for your financial decisions. We really encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. So what are the goals that we want to achieve today? Well, I'd like you to walk away from this webinar with a better understanding of the tax impacts for various COVID relief programs that have been signed into law by Congress in the last year and a half. And there's been a lot of activity and a lot of things that have been happening. So we'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, quite a mouthful, that was signed into law in March of 2020, and we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. So again, you should leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professionals in order to make the best decisions for your business. We're going to be focused on 3 specific programs. We're going to talk about the Payroll Protection Program, the Economic Injury and Disaster Loan, commonly called the EIDL, and also the Employee Retention Tax Credit. So those are the 3 areas we're going to focus on today. I'm going to be reviewing the timeline, how they've evolved, what their tax implications are, and any frequently asked questions. And again, we'll end today's webinar by addressing any questions that you may have through the Q&A. So how did we get started on this journey? And it seems to me it seems a lot longer than it really has, but it has been a year and a half. We started on March 6th, when Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriation Act. And what this did is it declared the coronavirus outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to start using its lending authority to make economic injury disaster loans for COVID to small businesses that were impacted by the pandemic. Then just a couple of weeks later, 3 weeks to be exact, Coronavirus Aid, Relief, and Economic Security Act was signed into law, very commonly called the CARES Act. What that act did is it created the Payroll Protection Program, and it provided nearly $350 billion in PPP loans. Then in early May, Congress provided an additional $320 billion in funding. It also introduced with the EIDL, it introduced the grants to pay EIDL applicants an advance on their EIDL loans. Now, these advances were treated as tax-free grants, and they do not need to be paid back. Unfortunately, this first advance, the funds were exhausted in July of 2020. The good news is that more money has been allocated out and targeted, and I'll go over that in a minute. The Employee Retention Tax Credit, and this is really a gem. This one is really, hopefully you're taking advantage of this. But the ERTC, or the Economic Retention Tax Credit, it's a fully refundable tax credit for employers equal to a percentage of your qualified wages, including qualified health plan expenses that are eligible, that what you pay to your employees. And again, I'll go into more detail and examples as we get further into the discussion. So then we waited a few months, and then in December 28th of 2020, you had the Consolidated Appropriation Act, and that was signed into law. And embedded in that act was $900 billion in additional COVID relief, as well as $300 billion in aid for small businesses. So $284 billion went to the SBA for the first and second forgivable small business loans, and about $20 billion went to EIDL grants for low-income communities. Then in March of this year, we had an additional American Rescue Plan Act. That was $1.9 trillion. That was voted on March 10th, and it was signed by President Biden on March 11th. And again, among other things, it provides small business assistance, including specific programs for restaurants and live venues. So you can see as we've moved down this path, starting back in 2020, it was very broad and overreaching. Now, as it's gotten further into the COVID pandemic, it's become more targeted to help smaller businesses and more targeted businesses. So the money is becoming more specific. On March 30th, Biden extended the PPP application deadline. So what does this mean to you? Well, exactly what does Congress mean, and who does it impact? Well, these particular COVID relief funds impact the IRS, the Small Business Administration, banks, CPAs, and of course you as business owners. Treasury and the IRS tax laws and guidance have lagged. So in other words, Congress signs an act, and it takes a while for the Treasury and the IRS to put out guidance and to put out specifics. So it's confusing, and in some instances, they even send out contradictory messages. We have new forms now that they've developed, new applications, and there's a confusing interpretation in a constantly changing environment. And that means you're going to have to deal with business situations and tax implications that you've never seen before. So let's first talk about the PPP, or the Payroll Protection Program. Now, the PPP is a loan designed to provide a direct incentive for small businesses to keep their workers on the payroll. It lasts from 8 to 24-week period. It had a first draw that was part of the CARES Act, and it can be used to fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs. There are several other expenses that fall under this particular PPP incentive. Then along came the second draw, which allowed people to take some additional PPP, and that was part of the Consolidated Appropriations Act in December. And that allows certain eligible buyers borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as the first. The PPP ended in May 31st and for applications. So basically applications are closed. We're now into what's called the forgivable part of the PPP loan. And that is the loan forgiveness clause. So a borrower can apply for forgiveness once all the loan proceeds for which the borrower is requesting have been used. Now, borrowers can apply for forgiveness anytime up to the maturity date of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then the PPP loan payments are no longer deferred and borrowers will begin making loan payments to their PPP lender. To apply for forgiveness, work with your PPP lender. Now, this is where I want to interject something that just came out actually this week. It became effective August 4th. And what this is, it's called a direct forgiveness portal. It's a new portal, and it's for lenders. It's for lenders who are smaller lenders who were having problems. They're not the big banks who are used to a lot of administrative paperwork and that kind of thing. These are small banks that are struggling to get money out to the businesses because they don't have the structure, the infrastructure to address a lot of these loans. So this particular portal was developed. Now your lender has to opt in to this portal, but basically what it does, it allows you to apply online for forgiveness. And it's for loans that are $150,000 or less. And that's almost 93 to 94% of all the loans that have gone out on PPP. So if your lender has opted in to use this portal, then they should be notifying you to let you know how you go about getting onto the portal and using it. But it's very quick, it's effective, and it's supposed to get the money out, the forgiveness out to you as quickly as possible. If you're over 150,000, this portal is not for you. You will continue to work with your lenders. And usually the lenders that have over $150,000 are the bigger lenders. So find out if your lender has opted into this. If they're a big lender like a big bank, chances are they have their own portal and they don't need this. But smaller minority banks might be using this, and so check with them. So a borrower can apply for forgiveness once all your loans have been used. So and I've already gone over that. So SBA offers free counseling and training events to help you with the Paycheck Protection Program. So please utilize those if at all possible. And that's at the www.sba.gov website. It's a great website. There's a lot of information out there. The CARES Act spells out that the forgiven loan amount won't be included in your taxable income. You don't pay taxes on the money you receive. This loan is to provide businesses with the money to keep running and to continue to pay your it never was meant to create a tax burden. With the passing of the Consolidated Appropriations Act on December 27th, they added more clarity to that act on how the expenses covered by a PPP loan will be treated. So previously, anything you spent your PPP loan on was not going to be tax deductible. Now, those expenses are tax deductible. So simply put, your PPP loan will not affect your tax filing process. Forgiven PPP loans are not taxable. Now, historically and forever, if you have a business loan and it is forgiven, that automatically made it taxable income. It's been in the IRS code forever, but with the PPP program, loans break from that code. Congress specified and the IRS clarified that forgiven PPP loans will not count as income. And this applies whether your entire loan is forgiven or just a portion. This loan is to provide businesses with money to keep running and continue to pay their employees, and it's never meant to create a tax burden So though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave those funds out of the conversation on your 2020 and 2021 taxes. Whether you received PPP funding in its first iteration or later on in 2021, you should still be careful when it comes to taxes, because there are still a lot of unanswered questions. And some of these questions stem from the confusion in the PPP application process. In some cases, application woes meant businesses received money that they weren't qualified for in the first place. For example, a company might have stated that it had employees when it only really had independent contractors. And while that may seem like a case of semantics to the layperson, that kind of difference could have major implications when it comes to when it comes time to file your business taxes. So how your funds are used is also important to keep in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So it's very important that you have clear and concise bookkeeping. Your signed PPP loan contract stated you would produce monthly government-ready financials. You are required to have bookkeeping in place, and if you don't, you could suffer penalties and fines or trouble with an audit. So it's always important to have separate accounts to identify your PPP loan. For example, other income PPP loan, non-taxable, on your balance sheet. It's also important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. Now, the bad news is if you received a PPP loan, expect a tax audit. Now, in recent months, the SBA and the US Treasury have announced that PPP loans in excess of 2 million will definitely be audited. Now, loans that are less than 2 million are also subject to an audit. And the much lower loans, which is most of what we have here in New Mexico, have been and will continue to be scrutinized. There is a higher probability that IRS will audit you, and they also have developed a hotline for anonymous callers to report possible fraud. So what this means basically is if you have a disgruntled employee, they could call this hotline and turn you in. Whether you're guilty or not is not the issue, but there is a line out there that's anonymous that wants you to be aware of because they have had some fraud going on this hotline. So how do you help ensure a smooth audit process? Well, first of all, don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation. They need to be on file for at least 6 years after your PP loan is repaid or forgiven. So make copies to send, but always retain your originals. And hire a CPA who can represent you and defend your business against the IRS if necessary. Here are some frequently asked questions. Does my PPP count as taxable income? As I've said previously, no funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP loan. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? Yes, if you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. Even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? Absolutely not. The funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interests. PPP loan proceeds cannot be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? And as I said previously, according to the U.S. Treasury, all PPP loans that exceed $2 million will be audited, and you are subject, any loan smaller than that are subject to an audit. So it's best to be prepared. Now, does your state tax forgiven PPP loans? In New Mexico, forgiven PPP loans are not taxed, but please consult with your CPA to confirm this. As I said, things change, and you want to make sure that you're following the guidelines for New Mexico. Next one I want to go over is EIDL, Economic Injury Disaster Loan. Now, before I get into this, I also wanted to go over the fact that I checked this week, and this week in New Mexico, they had about $990 million that have been sent out to small businesses in New Mexico. That appears to be about 15,207, to be exact, loans that are out there in New Mexico right now. So that's the good news. It is getting out. The bad news is, and I want to let everybody know, is, as you are probably aware, there's an infrastructure bill that Congress is putting through for signature and approval. And that particular bill has a good probability of taking any leftover funds from the EIDL that have not been distributed. So if there's any leftover funds, those have been slated to go to the tax relief bill. Now, that bill has not been signed, understand that, but right now, that's what the language in the bill says. So if you are interested in this particular program, I would apply quickly, because anybody who currently has applied, their applications are in, they've been accepted, you're fine. But I would get that application done quickly before these funds dry up and are moved over to the infrastructure bill. So though SBA disaster loans have been available for years, the EIDL was signed into law in March of 2020, which was passed by Congress to provide emergency relief to American workers and small businesses that are struggling to survive due to the impact of COVID-19. So if you are a small business or a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that have suffered substantial economic injury as a result of the COVID-19 pandemic, you can apply for a COVID-19 EIDL loan. Now, these loans do not go through a lender like the PPP does, but they come directly from the Small Business Administration Disaster Assistance, and there is no cost to apply. You can get on the website disasterloan.sba.gov, and the applications are there, and it walks you through very clearly as what the process is. So the EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. But along with those loans, those EIDL loans, comes the EIDL grants. And the first grant that was, as I talked about, is the money dried up very quickly. A lot of people jumped on those grants. But since then, small businesses may be eligible now for a more targeted EIDL advance grant of up to $10,000, as well as a supplemental targeted advance of $5,000. Now, these grants do not have to be repaid, and the SBA is now encouraging all eligible businesses to apply. Now, the grant program was part of the initial CARES Act, as I said, and the funds were exhausted within weeks. So it was in December that Congress allocated additional funds for the program, and they established a more targeted eligibility criteria. So to be considered for one of these grants, your business must meet the eligibility requirements and apply for an EIDL loan. So in order to get grants, please apply for the loan first. However, you do not have to get or accept the loan to get the grant. So what are some of the questions here? Do I qualify for a targeted EIDL advance? Well, you have to be located in a low-income community, and you have to have suffered an economic loss greater than 30%, and you have to employ not more than 300 employees. So in addition, the business must qualify as an eligible entity, as was defined in the first CARES Act back in 2020. So a small business, a cooperative, an ESOP tribal concern with fewer than 500 employees, you have to, an individual who operates under as a sole proprietorship with or without employees, or as an independent contractor, or a private nonprofit or small agricultural cooperative. The business must have been in operation by January 31st, 2020, and the business must be directly affected by COVID-19. So what do we mean by economic loss definition? That's a pretty generic terminology. The amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. So how do I demonstrate economic loss? Well, you need to get your business tax documents organized and up to date, because that's essential in applying for the grant and demonstrating that you qualify. And we talked about a low income area. Now the SBA has released an online tool to help borrowers understand if they are in a low income area. Now I want you to understand that the business address must be located in the low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. What are these new $5,000 supplemental grants? Well, in March of 2021, this year, they included $5 billion in funding for supplemental targeted grants of $5,000 in the hardest hit industries. How do you qualify? You have to have suffered an economic loss of greater than 50%, and you have to employ not more than 10 employees. So you can see it's very targeted money for very small businesses. This supplemental grant is in addition to the $10,000 targeted EIDL. The SBA will reach out to small business owners who applied for the targeted advance if they appear to be eligible for the supplemental. Getting your business tax documents organized and up to date will be essential for applying for this grant and demonstrating that you do qualify. Now, the EIDL grants, initially those funds from the advances back in 2020 were to be reported as taxable income. But that decision was reversed by the Consolidated Appropriations Act in December. It does not need to be included in your taxable income when you're filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from PPP for loan forgiveness purposes. Separate program, you can get funding from both. Check with your tax advisor about the tax implications at the state or local level, as I said, just to make sure that they're not taxable in New Mexico. Will EIDL loans be audited? Now, when you received your EIDL loan, you agreed to spend the funds provided for certain business expenses. As part of your loan agreement, you agree to maintain records and provide these records to the SBA to be audited if necessary. Well, while there is a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. Well, how do I qualify for a targeted EIDL grant? If you previously applied for an EIDL loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for an EIDL, you can do so at sba.gov. If your business appears eligible, you will be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan through December 31st, 2020, as long as funds are available. If it appears your business also qualifies for the targeted advance or the supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? No. EIDL loans, not advances, must be repaid over 30 years. Unlike the PPP loans, there is no forgiveness process for these loans. Can I also apply for the Paycheck Protection Program? Absolutely. As I said, Paycheck Protection loans may be fully forgiven if they are spent on certain expenses, primarily payroll. And I believe that percentage is 60% has to be spent on payroll, which essentially turns them into a grant. Note that the PPP loan program is now closed for new applicants, so they are into the forgiven part of the program. However, if your business did receive a PPP loan, you may still be eligible for an EIDL loan and/or grant. Businesses may apply for both PPP and EIDL if you qualify. The next one that I want to talk about this morning is the ERTC. This is a wonderful and has a lot of advantages, and hopefully you'll be able to take advantage of this. It's the Employee Retention Credit. It's a tax credit first put in place last year as a temporary coronavirus relief provision to assist businesses in keeping employees on payroll. Now, since then, with the various acts that we've had coming out, the ERC has been significantly expanded. And in the most recent relief bill in January, the ERC has been extended for all of 2021. Now, understand that there are different rules between 2020 and 2021. In 2020, you had to have 100 or less qualified full-time equivalents or full-time employees. In 2021, they've upped that to 500 or less full-time equivalents. In 2020, tax credit up to 50% of $10,000. In this year, in 2021, that tax credit is now up to 70% of $10,000. So the terms between the two have really become much better in 2021. Now, this credit is available to businesses with fewer than 500 or 100 in 2020 employees who either suspended or partially suspended their business due to COVID-19 because of a government order, or they experienced a 50% for 2020 or 20% for 2021 decline in gross receipts when compared with the same quarter in the previous year. Now, as we all know, living in New Mexico, there are a series of New Mexican government health orders in 2020 and 2021, and each order was effective for different dates, different businesses, and have different implications on your business. So for details on who was impacted and the dates when the orders were effective, you can go to the New Mexico Health Organization, and here's the link below. We'll be sending this presentation out to you so you can have that link. And that will help you understand when you qualify for the first one, which is the suspended or partially suspended their businesses due to COVID-19 because of a government order. But understand it's not suspended or partially suspended and experienced a decline in gross receipts. It's either or. Now, these tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for a dollar basis. The credit is calculated per employee and is 70% this year of up to $10,000 in qualified wages paid per quarter. Now, qualified wages include the portion of your employee's earnings that you pay and report on IRS Form 941. Is this credit taxable? Well, kind of yes and no. The ERC credit is subject to income tax. Wages on claimed credit must be reduced by the amount of the credit, which results in actually the credit being taxable income. Reduction in wages may also impact Section 199A eligible wages for purposes of the 20% qualified business income deduction. If the credit is claimed on 2020 payroll taxes after the tax return has been filed, an amended income tax return may be required to accurately exclude wages reduced for the ERC. The most important thing I want you to be aware of on this slide is there is no double dipping between PPP and ERTC. Now, what exactly does that mean? Both of these programs are for payroll. So I'm going to give you an example. So example one, and this is a very theoretical, made up out of my mind company. It's not a real company. But let's say their name is Star Technical Support. They're a small business in Roswell, New Mexico. When they compared their quarter two of 2020 to quarter two of 2019, Star experienced a 55% decrease in gross receipts. Now in 2020, in order to qualify, you have to have a greater than 50% decrease, which they have. So this business qualifies for 2020 ERTC. Now, the other thing that Star did is they got a PPP funding of $12,000. Now, Star has a technical support. They have five employees, and each of these full-time equivalents or full-time employees is paid $8,000 per quarter, which includes their health insurance benefits. In quarter two of 2020, Star paid their employees $40,000. That's their 5 employees times the $8,000 per quarter is equal to the $40,000. But because they also received the PPP, you have to subtract what they received from their credit. So $40,000, which is what they're eligible for, minus the $12,000 of the PPP that they received, means that they are still eligible for $8,000 in the employee retention tax credit. Here's another example. This is another theoretical company. They're called Fred's Fantastic Car Wash, and they're located in Los Lunas. When they compare quarter one of 2021 to quarter one of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now in 2021, you have to in order to qualify, you have to have greater than 20%. And they do, they have 25% decrease. So therefore, their business qualifies for the ERTC. Now, Fred's Fantastic Car Wash has 10 employees, and each employee is paid $7,000 per quarter, again, including their health insurance benefits. So in quarter one of 2021, Fred's paid their employees $70,000. And that's 10,000 times 7,000 equals 70,000. They are qualifying now for 70% times 70,000. So they qualify for $49,000 of a credit with an annual estimated credit for 2021 of $196,000. So this is a really good thing to take advantage of if you can. And again, if you say, well, I didn't see my gross receipts code go down, you may have been impacted by a government order that suspended your business, which means you would still qualify. So let me give you an example of the differences between the 2 years and how much this has been improved in 2021. So in 2020, you had to have 100 employees. They've upped that in 2021 to 500. In 2020, you had to have a gross receipt decrease of 50%. They've now made it that you only have to have a gross decrease of 20% to qualify. In 2020, there was a wage cap per employee of $10,000 per year. Now it's $10,000 per quarter. And the wage credit per employee was in 2020, 50%, and now it's 70%. So quite a bit of changes between the 2 years, all to the better. So how do you file? If your business was not in existence in 2019, you can use the average quarterly wages that you paid in 2020. Exclusions, you cannot use the owner's pay or the owner's relative pays when calculating wages. Now, there's a lot of discussion on this, so check with your CPA to make sure. There's a lot of ambiguity and translation of some of the IRS rules in this regard. So file to apply this credit using your standard quarterly form, your 941. If you want to file in advance, there's a form to do that to get the money more quickly. You can use Form 7200, advance payment of employee credit due to COVID-19. If you haven't taken advantage of the ERTC in either 2020 or this year, you can file retroactively using Form 941-X, Adjusted Employer's Quarterly Tax Return. How long do I have to file for a tax credit? Well, the latter of 3 years after the original filing or 2 years from paying the tax. But please get professional guidance and support when filing. There's a lot of nuances in this. And so get advice and help from your payroll expert, preferably a professional who is well informed on the current interpretation and laws. While the ERC is certainly a taxpayer-friendly relief provision, the IRS is not just giving dollars away. So they're looking at taxpayer submissions both on the front end and then auditing them down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. So to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for ERC. Business owners need to be aware as to whether their company qualifies for ERC, and please don't miss out on this terrific tax incentive. So what are some of the frequently asked questions? Well, first of all, I can't claim ERC if I already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. In the Consolidated Appropriation Act of 2021, they removed that limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses, and it is meant to be spread over 6 months. This leaves plenty of uncovered wage expense for claiming on your ERC. My business did not have a drop in gross receipts of 50% or more. The CAA has changed the qualifications, so a reduction of 20% now qualifies. But remember, there's another way to qualify for the ERC if your business has been subject to a partial or full suspension due to a government order. My business was not shut down during the pandemic. Even a partial suspension order by the government, and that would be federal, state, or local, of your business could potentially qualify. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain or your vendors, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify you for ERC. Key considerations are due to the government-ordered partial or full suspension was your business not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on business operations? Remember, the partial or full suspension is an alternative way to qualify, separate from the reduction in gross receipts. Well, my company was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business may still qualify you. So for example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, great news. If your company has grown during quarantine, that's good. But you may have experienced a full or partial suspension, and there are expenses that may qualify. Well, sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of CAA, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. Again, this is a refundable credit. In practice, that means that any credit overage above tax liability is sent to the business owner as a refund. My company has grown to over 500 employees, so we are not eligible. The employee count restriction is based on full-time equivalent, which is a more involved calculation than just counting everyone in your office. If you paid employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for ERC. Failure to document, the tax man cometh. The ERC is a refundable tax credit and it provides robust benefits. If you had to draw up a tax provision that makes the IRS lie awake at night, it would be this refundable tax credit. There are a lot of nuances in filing for this credit, so please make sure you work with a payroll professional to make sure you get the full credit that you're eligible for. So let's kind of walk back and talk about what I've discussed today. So what is the process? Congress votes, they enact laws, and they provide government funding. The IRS, the Small Business Administration, state and local governments, they interpret that law and the tax implications. They create new forms and reporting requirements. And CPAs need to follow those interpretations, and they provide guidance to the taxpayer. What's the result? Well, it can be very confusing. And there's a lot of ambiguity and restating and clarification. That's part of the reason that this year, the deadline for the 2020 tax filing was moved out to May 17th. There was a second round of PPP. There were changes to the employee retention credit. There was continued stay-at-home orders, making it difficult to access taxpayer data. And the IRS is short of staff due to COVID-19 pandemics. All of those drove the deadline this year. So your 2020 and 2021 taxes are likely going to look a little different than they normally do. This means that you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So record keeping is the key. Accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and categorize all your business expenses on both your balance sheet and your P&L. Receipts and invoices should be digitally filed and recorded. Take the time, please. It's well worth the effort to be able to see where your money is going and ensure you'll be able to get most of your eligible deductions from tax season. And again, please keep in mind this information is changing rapidly and is based on current understanding of the programs. It can and likely will change. And although we will be monitoring and updating as new information becomes available, please don't rely solely on this presentation for your financial decisions. We encourage you to consult your lawyers, your CPAs, your payroll experts, and your financial advisors. Make sure that whomever you consult with, that they are up to date on the most recent guidance from the SBA, IRS, or US Treasury. It's at this point that we'll go into the Q&A. I don't know if we have any out there, Leslie?
Right now, Peggy, we do not have any questions, but I do, if you have questions, raise your hand or type them into the Q&A. But while we're waiting, I want to remind everyone that we're lucky enough to have Peggy for the next couple of weeks into September, which is a good thing because she was talking about 2020 and 2021 taxes. So if you have questions that you think of, because it's a lot of information to take in, so once you get it back into your books and stuff and kind of look at what you've got going on, if you have questions, go ahead and come back to one of her subsequent webinars and bring your questions, because a lot of times you will think about it after the webinar ends. We have this slides that are going to be sent to you. So when you get the slides sent to you, look through them and bring your questions in. We'll be glad to answer any of them that you do have. Also, I do want to remind everyone real quickly is that we have a lot of no-cost webinars coming up for your small business. Next week, we have Cash is King, cash management for your small business, secrets to selling ads on your website. We have Eddie Midland that's coming up with 3 steps to attracting and retaining customers. We have a bilingual session on transitioning to the new normal, another bilingual session on accessing financial resources. I am so not done. This is just the beginning of the week. Personal liability and how to avoid it. And then, like I said, we do have Peggy coming up on Friday that can also answer any questions that may come up between now and then.
One of the things too, Leslie, is you do have the no-cost counseling, and you have about, what did you say, about 19 local centers that you can work to get people connected with here in New Mexico?
We do. So they are located throughout all of New Mexico. We have them down to Las Cruces, up to Taos, Santa Fe. I'm over in Lee County. We have them in the eastern, and then we go all the way into Gallup, Farmington, Silver City. So there, what that means to you is that if you'd like to get connected for no-cost counseling in your local area, let me know and I'll be glad to connect you.
Leslie, will they be receiving a survey via email after this presentation?
Yes, I'd like to send a post survey so we can kind of get your feedback and tailor our webinars to what's most important to you in your business.
Excellent. Thank you, Leslie. I want to thank everyone that attended. I'm hoping that this presentation gave you some good questions to go ask your professionals to get the most out of these wonderful programs that do exist, and the funding is starting to get less and less. So it's important that you jump on it if at all possible. So thank you again for attending. We really appreciate your participation.
Thanks, everybody. Have a great rest of your week. Bye.
Thank you.
Thank you, Peggy.
Bye-bye.
Bye.